volunteer to take us through? Who would volunteer to take us through? Okay, James, your hand is up. So you first tell me what are the items that have been affected, and then how you classify them and those things. So the first question, James, what are the items that are affected under this scenario? Or James is off. Who wants to help us? James, your hand is still up, but you're not talking, so Presla. Chris? Okay, Benson, your hand is also up. James, you are ready to talk now? James, are you ready to talk now? Okay, Benson, your hand is up. You can unmute.
I'm not sure of the inventory. The owner's asset will be affected by an amount of.
No, okay, so let's take it step by step so that we don't confuse our friends. The first thing, what are the items that have been affected?
The items that have been affected is the assets and the capital.
No, mention the specific name.
The specific
then
name.
We sold inventory, cost 10,000 Ghana cedis on credit for 6,000 Ghana cedis. So what are the...
Madam, under the asset side, the asset will be affected. That is the let's say, how would I put it?
Benson.
Madam, I was saying that the asset will be affected by 1,000 Ghana cedis.
Okay.
Then our amount on which the creditors are owing us will be also be increased by an amount of 6,000.
No, please. Let's take it one step at a time. Okay. So the first thing is that it says we sold inventory costing 1,000 Ghana cedis on credit. We sold inventory costing 1,000 Ghana cedis on credit for 6,000 Ghana cedis. Who else wants to try?
Madam, that is what I was about to say, that the output that has been affected of inventory.
Inventory, okay. Then what else has been affected?
And then our liability has also been.
Why are you thinking about liability? Is it because you saw credit? So now immediately you see credit, you say liability.
Yes, that is what I was thinking.
No, but listen. So let's think about it. If you sell something to someone on credit, you sold it. Who is that person to you? Is that person a debtor or a creditor? You sold. Yes, the person is your debtor. In the previous instance, we bought something from someone on credit. But in this scenario, we have sold something, we have sold goods costing thousands on credit, 6,000. So the item involved is what? Goods and then data. Are we okay? Are we fine?
No, madam. I'm still not getting it.
Okay, which aspect of it don't you get?
From the last statement that you made.
Which is?
From my understanding, I was thinking probably if asset equals capital plus liability, that means we would have to make this we would have to make the capital the subject. Okay,
no,
that's what I was
thinking.
thinking.
The equation is assets equal to liability plus capital, right? But you realize that I keep telling you that let's follow the steps. When you read a transaction, ask yourself, what are the items that I see here? So you don't, the first thing, you don't even think of asset, liability, or equity as the first thing. The first thing you think about is what are the items involved in this transaction I just read. Once you're able to identify what the items are, then the next one is now to do the classification. Is it an asset? Is it a liability? Is it an equity item? Using the definitions that we've already spoken about. Then once you're able to now do the classifications, then you now ask yourself, have there been increases or decreases in these items we are talking about? Then you use that to now show the effect on the balance sheet. Okay, so let's let other people try. I see that there are other hands also up. So let's, Jamal, your hand has been up for a while. Let's let Jamal try. So we are still on that one. We've not gotten over it. We sold inventory. So if I'm a business person and I sell inventory costing 1,000 cedis on credit for 6,000, what has happened?
Okay, madam, I think with this, you said asset, that is the inventory.
Yes.
It's worth of 1,000 Ghana cedi. So when we bought, you said sold an asset of 1,000 Ghana cedi on credit. So to a creditor, to a debtor.
Okay.
You are now a creditor to the person you are selling to, since it's on credit.
Look at it from your perspective so that you don't confuse somebody. So use the word debtor.
Okay, debtor.
Okay.
Okay, thank you very much. So we become now, we are now a debtor.
We now have a debtor.
Yes, we now have a debtor. And a debtor becomes an asset.
Okay.
I don't know whether I'm correct.
No, you are on the right track. Okay. But then the figures are different. What do you think is accounting for the differences in the figures?
A profit increase. Since we bought something.
Profit. Exactly. Because the thing is costing 1,000 cedis.
Yeah.
And you sold it for how much?
For 6,000.
6,000.
So now you've made a profit of how much?
5,000.
Exactly. So for this particular transaction, we see inventory. If we are identifying the items, we see inventory, right?
Yes, madam.
We see data.
Yes.
And we see profits.
Sure.
Okay, so then the next step, inventory. Is it an asset? Is it a liability? Is it an equity item?
It's
an asset.
It's an asset. It's an asset. Great. Data. Is it an asset? Is it a liability? Is it an equity item?
It's an asset.
It's an asset. It's an asset. Good. Great, because it's a resource. You are going to get some. Good. Very good. Then what about the profits? You know that profit accrues to who?
To the owner of the company.
The owner. So you know that sometimes under a sole proprietorship and partnership, we like to say it casually. Profit and losses accrue to the owner. That's the thing. So profit is for the owners, right? So it means that the profit that has been made would go and increase equity or capital.
Yeah.
Are we okay?
Yes, please.
Yes, please.
Now we can go and update the equation. So it means that now we will start with an asset of 7,000, right?
Yes, please.
Because from this slide, now our asset was standing at 7,000. So we'll start from our asset is 7,000, but now we have gained an asset worth how much?
6,000.
5,000.
Okay, so wait, so now let's start with the first item. Wait, inventory. Inventory, has it increased or it has reduced?
It has reduced.
It has reduced. So it means that now we'll have 7,000 minus 1,000. Agreed?
Yes. Yes.
Yes.
Okay, then you also told me, you said it, that debtors has increased by how much? 6,000.
6,000.
Told me that debtors is an asset.
Yes. Like
Now we'll see 7,000 minus 1,000 plus 6,000. Agreed?
Exactly. Yes, madam.
yes. Yes, madam.
Equal to. Then when we go to the other side, we'll see that it will now be what? 5,000 plus 5,000.
1,000 profit.
Yes, plus the 5,000 profit.
Profit.
Right?
Yes.
Yeah.
So now it means that our capital will now be how much? 10,000.
10,000.
Plus our liability of 2,000.
2,000.
So now it means that it would be 12,000 is equal to 12,000.
12,000.
I hope people have not.
Sorry, excuse me. I don't see the calculator we are doing.
And no, it's not there. I'm discussing with you.
Sorry.
My expectation is that you'll be doing it on your own.
So I wish you could demonstrate it on this thing for us.
A question, please.
Okay, please, I'm listening to your question.
Okay. Instead, okay, what I did was
Please, who is talking? Because I see three
Abdul.
people's hand. It's Abdul, okay.
Yes. So instead of before you went on to explain it to us, I did it this way. The 7,000 equals 7,000. So from the 7,000, I deducted 1,000 inventory from the 7,000 on both sides, which gave me 6,000 is equal to 6,000. And then I added the credits of 6,000 to the existing 6,000 on both sides, which also gave me the 12,000 that's you had. I don't know if my process is right or it's okay.
No.
Instead of deducting 1,000 from the first 6,000.
No, remember that our assets previously was standing at 7,000.
Yes.
So then our goods will reduce by the 1,000.
Yes.
Then our debtors would increase by 6,000. So plus 6,000.
Yeah, I get the whole.
Mm-hmm. So please do it step by step. Don't miss the steps.
Okay.
Okay.
I have a question.
Yes. You are Benson. If you are done, lower your hand, okay, so that I'm able to see those whose hands are. Benson, is that you, or then I should let Gifty speak? Benson. Benson, are you ready? Okay, Gifty.
Hello, madam.
Yes, Gifty.
And please, I understand everything you've done. I understand the 1,000, the 6,000, but it's left with how to write it. I understand what exactly it is that you are saying, but where to put what the 6,000 minus, I don't know. What do you have?
You see the slide I'm showing right now?
Yes, I can see it, please.
Okay, so it means that start with the way this one is starting with the 5,000, as at this time, we'll be starting with how much? 7,000.
Okay.
Then minus 1,000 plus 6,000.
Okay.
Would be equal to the 5,000 plus another 5,000 for profit. Then plus the 2,000 that was already in the liability. So you end up getting 12,000 equal to 12,000. 50, is it okay?
I'll take it like that.
I'll take it like that. It's not an. Is it either you got it or you did not get it?
No, like I told you earlier on, I really understand exactly what it is you are saying. I understand everything perfectly well.
And the same super says, so that's how you do it.
Yes, I understand everything perfectly. Everything you've said, I get it. But how to write it is my problem. I get it up to the point you have on the screen. I understand everything.
I wanted to get you the course outline so that at least the first two know my know. I'm sure it's the same thing you guys say, so if you have now I cannot understand what she's saying, but
please mute yourself. Please, I think it's Priscilla. Mute yourself. Can you guys still see my screen?
Yes, please.
Yes, we can. Yes, we can.
Yes, please.
Is it getting clearer now?
Yes, please.
So my expectation is that after doing this one, at least you can try the rest on your own. Okay, so now you can see my screen. I started with the previous 7,000 as my assets was standing at. And then I subtracted 1,000, right? Then I added 6,000, which is the debtors that we gained. Then on the other side, the 5,000 plus another 5,000. You can see that, which is the profit. Please, are we okay now?
Yes, please. Yes, please. Thank you.
So my hope is that you go and then try the subsequent ones for your own. Okay, so you've seen the subsequent one. You've seen the subsequent ones. Are we there?
Yes, please.
Yes, please.
So
Yes, we are.
try them on your own and then talk, but I think your tutorials also, you do more of this as well. But at least hopefully with what I just did, you've been able to also see how to go about it. So let's continue. Remember that we've been just talking about increases in assets, increases in liability, decreases in liability, and all those things. So that is really what the double entry is about, right? To increase your assets, you need to debit the assets account, right? So whenever there's an increase in assets, there's a hand up, Sadiq.
I wanted to ask. So with the debit is addition and the credit is subtraction.
Can you repeat what you said?
I'm asking that in terms of like a layman's language. If you say debit, that's addition. And if you say credit, it's subtraction.
Not necessarily, dependent on what you're talking about. Because if you are talking about an asset, an addition is debit, right? And a reduction is credit. But if you are talking about capital and liability, an increase or an addition is credit, and a reduction is debit. So it's dependent on the item you are talking about. So you realize that the asset is equal to liability plus equity. So liability and equity, they go together. Whenever there's an increase in liability or equity, you credit. Whenever there's a decrease in them, you debit. The asset is standing on its own alone, and so the opposite happens. Whenever there's an increase in assets, you debit. Whenever there's a decrease in assets, you credit. Do you get me?
Yes.
So if it's the addition or the sub depends on the item you are talking about. If it's an asset, the asset stands on its own. Then the liability and equity, because they are also on one side, they are also dealt with in a similar fashion. So that's the standing you see there, that on the asset side, anytime there's an increase in an asset, you debit. If it's a decrease in that asset, you credit. When you come to the liability and the capital side, you see increases in either of them, you credit. And then if you see a reduction, you debit. Are we okay?
Yes.
I still see a number of hands up. Leonie.
Yes, ma'am. Thank you so much. Please, I need a clarification on something when it comes to representing the transaction on the balance sheet. I understand how we do the calculations. My question is, are we to indicate whatever brought in the assets? For example, if it's cash, when writing, do we indicate cash before writing the 5,000? If it's debit, if it's a debt, do we indicate that this 2,000 is a debt, or we should just do calculations and put the figures like that without any explanation?
Okay, Leonie, you realize that here we showed what the exact asset was before we put the figures there, right?
Yes, ma'am.
So there's no harm in putting what's the specific one. So I could have the one that we did here. Okay. The one I did here, right? I started with the 7,000. Just before it, I could have put in a stock and then debtors, right? And then I could have put their profits. And then before under it, I would have come to put the specific amounts there. So nothing hinders me from doing that.
Okay. Thank you.
I know that it may look like it's all over the place, but with practice, you'll be all right. And then I know with your tutorial as well, you practice more of this, so it become a bit more clearer. But if you can also state the exact things as we are seeing, that would also make your work better.
Thank you.
Okay. Somebody else also had their hand up, so let me deal with that before. Kelvin.
Yes, madam. I was thinking if we can do the second one before we proceed.
Kelvin.
Yes, madam. I'm thinking we can try our hands on the second question, then we proceed.
We have less than an hour to go, and we are just 50% through what we were supposed to do. So, why don't we rather do it this way? If we're able to go through what we're supposed to do, I'll come back and do more examples with you again. Is that a fair deal?
Yeah, madam.
Yes, very good.
Okay, madam.
So wait, who is talking right now?
Madam Frank.
Frank, I don't see you.
Madam, please, can you hear my voice?
Okay, yes.
Yeah. Madam, the reason why...
1 second, if I've dealt with you, can you lower your hand so that...
Okay. Madam, please, can I talk now?
Yes, I'm listening.
Madam, the reason why probably I'm worrying you too much this morning is that some of us, we do not have this accounting background, and then we are eager to learn. Okay, so, some of the calculations and other stuff, it just seems somehow weird. Excuse me of my word that I'm using. Like, it's really difficult for us, and we also want to learn. Madam, please, you get me.
For you specifically?
Madam, specifically, I just want you to slow down a bit so that we can actually get the concept well, please.
What concept are you struggling to get?
As I was saying now, I was having some challenges and other stuff with the issue of my connections. That's also a major factor. Okay, so like I just, got in and then all of a sudden I'm just seeing this assets, capital, liabilities, and some calculations, which is making me more confused.
Frank, I believe you should see somebody else after class to help you with this. Otherwise, it will slow the class.
Okay. Then please, can someone help me with it, because I really need a helping hand.
Frank, I've told you something. I told you that there would be a tutorial session specifically on this, and it would make it clearer. Whenever you have an encounter with something for the first time, you would understand some, but you will not understand everything. But then the hard theory, the hard theory, you go back, you sit down, you go through the slides, you try to look at it again. This was what she was trying to say. Okay. And when your tutorial sessions also come, it will make it clearer. You get it?
Okay.
So I know that you have assistants who will take you through tutorials. And I think the first thing we do for any tutorial session is this accounting information. It will become a bit more clearer. I know that a number of you will not get 100%, but my hope is that at least 50%, between 50 to 30%, 30 to 50%, at least you understand. When you sit down with your own, now you get to 70%. And with the tutorial, now you become 40%. Right?
Okay, madam.
When we all have encounters with things for the very first time, it looks all over. But you need to also be part of the work, right?
Okay. Thank you very much.
Welcome. Nade, your hand was up. I see that it's down now. Benson, your hand is also down. Please, can I move on?
No, my hand is still up.
Okay, what is it then?
Madam, the question was, per the submission that you were making, you said debtors are an asset. So I was asking if unforeseen circumstances happen and our debtors are not able to pay us, will the debt be still an asset?
Okay. So in accounting, we have a concept we call prudence, right?
Okay.
We do not anticipate for profit, but we make provision for possible loss, right? And so,
Okay.
under that, we make provision for the possibility that some of these debts will go bad. So we make provision or we make allowances for the possibility that a portion of these people who owe us may not pay. Right, so we make those allowances in that sense, and then as and when portions, we are sure that portions of it is also not going to be collectible, or it becomes bad, we expense it. We expense it. Are we okay?
Yes, please.
Yes, we are okay. We may proceed.
Okay. We can move on now, right?
Yes,
yes, please.
Okay. Okay. So now let's look at the overview of the accounting. Okay. Okay, so we are moving into another aspect. So basically what is happening is that the accounting that we see, the first thing we try to do this morning is to at least understand how the equation works, right? And then what we've also done is that we've seen that the equation basically it's what is summarized in the balance sheet. So we've tried to have a feel of some transactions and how transactions Okay. We've tried to look at, have a feel of transactions and how those transactions have an effect, right? Have an effect on the accounting equation. Are we okay? Okay, so the next part of this class, we'll look at the steps involved in the accounting cycle, right? So what is even accounting? When you go to the accounting department, what is the cycle they go through? And we'll try and describe what the chart of accounts also look like, right? Okay, so this is the accounting cycle. When you have business activity, so the business activities are happening, right? The first stage in the cycle is that there will be measurement. We need to first analyze the transaction, what we just did, right? The transactions or the business activities that happen. You need to try and analyze them. So you try and analyze them and understand them before the next thing you do is that you go on and process that transaction that's happening, right? So okay, what is the transaction? What are its implications? What are the money involved? Or what are the monetary values involved? Once you've seen that particular measurement and then you try to analyze the transactions that have come in. Now there's the need to process the transactions, right? So the data has come in, the transactions have come, you have all the raw data. This one, you have your receipt books, you have your whatever, you have all of them. The end of the day, you need to process these things. So once you process them, that's now you have entered into the where you record them, then you post them, into the ledgers. You will now prepare your trial balance. You would adjust if there are any adjustments that needs to be done. You do them. Then at the end of the day, you close the account and prepare your post-closing trial balance. At the end of the day, after you've now processed all of these records you are keeping, all the records, you will come out with what we call the financial statement, which is what everybody else will see, right? So what everybody else will see will be the end result, which is the financial statement, which is now supposed to be communicated to decision makers. So decision makers will now have to look at the financial statements that you've come out with from all the records and the processing that have happened, and then they will make decisions. I know that you've done the uses of accounting information. So the various uses, the management, employees, investors, creditors, they will all use it. They will all make use of that particular information to make the required decisions. Are we okay with that? Okay, so basically this is what the cycle is about. Okay, now let's look at them. Okay, so in terms of recording the accounting data that comes through the accounting cycle, right? The data will be collected, so source document. So when I say source document, basically when you go and buy something, you take a receipt, or you would issue out receipts to people as well. You get invoices, you get all these things that when they ask you, how much did you buy the thing? Oh, I bought it for this. Okay, where is your evidence? Then you show your evidence, right? So at the data collection stage, it's those evidence you are still collecting. When someone buys from you, you write it down, you give the person a receipt and all those things. Then now we'll analyze all the things that have happened, right? So the data collection process is happening. We'll analyze, okay, so now this one bought from me on credit. This one sold to me on credit. So the transaction analysis will take place. Then we will journalize. So the journal is the first place we make our recording as an accountant, right? So it's the chronological record of the economic impact of the transactions we are having. So we also call it the book of prime entry. The book of prime entry. So that's where we would record these things primarily, right? So when we say chronological, day by day, the events that are occurring, we are recording it into it. So there are different categories of these books of prime entry, or these day books. So if we have the sales day book, the purchases day book, the general journal, all those things, cash book, and all those things. So you have them. That is the first place you will record them. So dates by dates, with everything that comes in, you will record. So you will realize that the journals will have huge data, right? Because you are recording everything into detail. Then after now you've journalized, you will post to the ledger, meaning that now you will start to put them together, sort of, you begin to aggregate them together and then start posting them into what we call the ledgers, right? So now things that relate to similar things, we start now grouping accounts that relate to similar things, right? So things, if assuming that on day one, you got something in relation to Ajwa, on day 23, you got another thing in relation to Ajwa, on day 27, you got another thing in relation to Ajwa. You realize that when you were recording it in the journals, you were just recording based on the dates and everything that were happening. You get it. But as you are posting to the ledgers now, everything relating to Ajwa will come together in one account. Please, are you understanding what I'm saying? Everything relates to all the similar things that you've been recording on a day-to-day basis. So maybe things relate, you pay for electricity on third. On another day, you also pay for electricity, maybe in the same month. So there were different days that you bought electricity all those things are scattered. In the journals, you were just doing the chronological recording, you understand? But now you're going to have to put them, sort of aggregate them, so that when you go into address accounts, there's a summary of all the things that relates to Adjoa and all the events and transactions and exchanges you had in Adjoa in the period that you are looking at. Are we okay? So that's what the posting to the ledgers are about. So once you are done with that, you need to now determine what the account balances are. So now, assuming you dealt with Adjoa on 13, 24, 27, 31st, you've put all those things, posted all those things to the ledgers. Now, the question is that, what is the account balance? How much do you actually owe Adjoa? So you need to now determine the account balances on each of these accounts that you've posted things into, right? So once you determine what the account balances are, then you prepare your trial balance, right? You prepare your trial balance. But sometimes, as you prepare the trial balance, there are certain adjustments that come. Maybe you did not know certain things as at the time you were doing it, or certain adjustments will have to happen. Maybe under the electricity, a portion of it is prepaid, a portion of it has not yet been paid, and things of that nature. So you deal with all the adjustments relating to specific issues that comes to your notice. Once you've done all those things, then now you have the correct balances that now you use to prepare your financial statement. So once you prepare your financial statement, there's also interpretations that also would go with it as well. Because remember that accounting is not complete until communication has taken place, and until the users of your information are able to make good decisions based on the financial statements that you've come out. I hope we are fine. So basically, these steps sort of summarize what goes on in the accounting cycle, right? Okay. We'll look at them one by one, right? So when we look at the source documents and data collection, as you see, is the part of the double entry is that every entry in the ledger shall be subjected to the book of prime entry, right? So the source document, like I told you, invoices, the receipts, the goods received, the dispatch notes, right? The checks, the pay-in slips, and the authorization notes. All these things, basically, the whole point is that show me proof, right? Show me proof. Then there's proof. So we don't just record things. There must be evidence because of what? Verification. Because of verification, there must be proof that, oh, the things you are recording indeed can be verified, and that you did not just cook up the figures. Are we okay? Okay. When we come to the books of original entry, the books of prime entry, or what we call the journals, right? We have the sales day book. The sales day book basically is used to record credit sales. Credit sales. So any sales you make, which is on credit, you record it in the sales day book or the sales journal. Okay, but sometimes when you sell things to people on credit, or when you make sales to people, when you go, some of them may be faulty, some of them may be damaged, some of them may not be the way that it is supposed to be. And so because of that, you have some returns. You will return, some of your customers will return those items back to you. And so that is why we have the sales returns day book, right? The sales returns day book as well. So at that point, you will record all the returns that you are also getting from the sales. Then we also have the purchases day book. The purchases day book. So the purchases day book is where you record all your credit purchases. So all the things you buy from your suppliers on credit, you record it there. And in the same way, when you also buy things and you realize that they are damaged, they probably were not the goods you ordered for, there's also purchasers returns. So purchasers returns as well. You would also send back the things that you also purchased. So you record it in the purchasers returns day or journal. Okay. Then we also have the general journal. The general journal, where we record other things that do not fall under the sales, the purchases, and the cash book, right? So the general journal, sometimes some unusual transactions may occur. For instance, sometimes you would buy or you sell your fixed assets. You record them there in that sense. Then we have the cash book, but the cash book has an interesting feature because the cash book works as both a journal and then a ledger, right? So when you look at the cash book, basically it records your cash and bank, cash transactions, your bank transactions as well. And then if there were any discounts that were also given, you also record it in your cash book. So your cash book basically deals with the transactions involving your cash and then your bank. When you look in these books of original entry or these journals, you will see the dates, right? The date of recording. Remember that in the journals, I talked about the fact that the recording is done chronologically, right? Chronologically. You see the dates, the name, you see the dates, the name.
Sorry, Pastor, you know, come on, you know.
You see the date, the name of the customer, the reference number. So you realize that we talked about source documents. So if it's a receipt, if it's an invoice, whatever document that is giving evidence of that sale or that purchase, it will have a number, right? A number. So that is the reference number that you quote there. Then every account, remember that we talked about personal accounts and impersonal accounts anyway. And under personal accounts, I told you that you record the debtors account and the creditors accounts there. So each of these people you deal with have their unique reference numbers so that you know where you are going to continually record it to. You note the reference number for that particular person that you dealt with there, right? And then once you've done all this original recording, now, like I said, you post to the ledger. What is posting is the process of transferring the transaction data, right, from the journal to the individual account. So like I told you, when you go to the ledger, there are individual accounts for all the items that you are, or all the items in the transaction that you have been working on. And so in the posting now, you'll be transferring everything that relates to those individual accounts. You post it to the respective accounts that carry them, right? So now you see specific names, everything relating to Adjoa in one account, everything relating to everybody who is your creditor. So it's that process of transferring the transaction data that you've already recorded chronologically in your journals to the individual accounts. Okay, then basically the posting reclassifies the data from that chronological format you had already done in the journals to account classification format. So in the journal, we had classified them chronologically based on the date when these transactions occurred. But as we are transferring them to the account now, to the ledgers now, the classification is moving more towards accounts, things of similar nature, right, or events that relate to the same thing. So for the ledgers as well, we have the sales or accounts receivable ledger, the sales or the accounts receivable ledger. Under the account receivable ledgers, we have the personal account of all your debtors, right? And you need to take note that your debtors can be individuals or they can be companies. So you have the personal account of all these individual people. in the sales or account receivable ledger. And then where do you pick the information for this particular ledger? You bring the information from your sales day book or your sales journal, and then your sales returns. That is where you pick these things from, or whatever you'll be recording in the personal account of the debtors. You go and look at your sales journal. Okay, day one, who did I sell to? I sold to Kojo Papa. Then I record it in Kojo Papa's account. Day two, who did I sell it to? I sold it to Auntie Memuna. Then I record the next one in Auntie Memuna's account. Day three, who did I sell it to? I sold it to KNF Limited. I go to KNF Limited's account and then I return it. In the same way, if there were also any returns relating to these people, you would also record it. So if there was a return relating to KNF Limited, you go into that KNF account and then you note that returns as well, right? So the sum of all the individual customer accounts, right? At the end of the day, you have the individual data accounts. So for customer A, customer B, customer C, customer D, at the end of the day, we'll sum up all the account balances on each of these customers, and that is what will give you that is what we normally would use the account receivable control account to know, right? So the account receivable control account, we find it in the general ledger, and there you have an aggregation of all our customers. So I hope you are getting it. In the sales ledger, we will find the individual customers and everything that related to them. We find it there individually. But then at the end of the day, because we are going to transfer it to the financial statements in aggregate, we would sum up all these individual customer account balances. And that is what we'll have on our account receivable control account, which we find in the general ledger. Are we all looking? Are we getting the picture?
Yes, please.
It was too quiet. Okay. In the same way, we would also have the purchases ledger, right? So the purchases ledger as well, we look at the personal accounts for all our creditors. And like I've already said, creditors, just like debtors, can be individuals or they can be companies. You could have either bought from companies or you could have bought from individuals, right? So where do you pick the items to record in the purchases ledger? You pick it from your purchases journal. Remember that in your purchases journal, I told you that you record all credit purchases. So all the credit purchases you've recorded there. Now you'll be transferring it to the corresponding account of the person you purchased from. So assuming 1st January, you bought something from Unilever Ghana Limited. 2nd day, you bought it from Anti-AC. 3rd day, you bought it from K & Sons Limited. You get it? So as you are picking all those things individually, chronologically, when you're coming here, you are going to now record them under their respective accounts. So when you come to the purchases ledger, anything relating to Unilever Ghana, you will record it under Unilever Ghana's account. Anything relating to K & Sons, you record it under K & Sons, right? And then just like the sales, at the end of the day, you record you sum up all the individual creditor accounts. And you end up with the accounts payable. You end up with the accounts payable control account. You end up with the accounts payable control account. Are we okay till this point?
Yes.
Okay. So then a quick question. If you are okay, a quick question. So after recording in the sales journal, where do I post to? After recording in the sales journal, where do I post to? After recording in the sales journal, where do I post to? Who is helping us? Lydia, your hand is up.
Yes, I think it will go to the assets column.
Yeah, Lydia. Okay, who else?
It will go to a general ledger.
Hey, who else?
Please, it will go to accounts receivable.
Yeah. Hey, then I've not done a good job. Okay. So the things recorded in the sales journal will go to your sales ledger. So we just said it, right? It will go to your sales ledger. So we
That's
said
what
that.
I said.
No, you said general ledger.
No, I said account receivable ledger.
Account receivable.
Oh, okay.
It's the same as sales.
Yes, it's the same. I know. Yes.
Okay. Thank
you. I thought I heard general ledger. Okay. No. So what about the things we record in our purchasers returns day book? Where will we post it to? The things we record.
Account payable.
Account payable.
Ledger.
Purchases ledger, yes. Account payable ledger. Okay. So that's what I wanted to make sure that we're all getting. Great. Okay, so let's look at the things that would go into the general ledger. Basically, the general ledger will hold real and nominal account. Remember we spoke about real and nominal account. The real accounts are what? Tangible accounts, property relating to tangible things. And nominal accounts we said were revenues, losses or expenses or capital items, right? So all those issues relating to all those things would be recorded in the general ledger, right? And then in the general ledger, you also find the aggregate sums of all the creditor and debtor account balances. You remember that when I was talking about the debtor and creditor account balances, I told you that at the end of the day, you sum up all the individual ones you are seeing under the sales, under the purchases, and then the totals for all your customers. So customer A, customer B, customer C, customer D. At the end of the day, you sum up all these customers and how much owe you. And that total is what will go into the control accounts under the general ledger. Are we okay? Okay, so let's look at the cash book. So I told you that the cash book is used to record, basically, cash includes balances on deposits with financial institutions, coins and currency on hand, and certain instruments, which is accepted by financial institutions for immediate deposits or withdrawal, such as check, right? So the cash book, like I told you, has an interesting function because it serves as both a ledger and a journal, right? So it works in that dual sort of way. So even though it's a sort of a book of prime entry, it will account for things with debit and credit. So one thing I think I did not mention is that when you post to the ledgers, right, double entry would work from the ledgers, right? So if the item you are talking about needs to be debited, it will be debited under the place where it's supposed to be debited. If it is supposed to be credited, it would also be credited in that sense. So for the cash book as well, it has both a debit and then a credit side where you record all the things you need to record, right? So with the cash book, it has a cash column, a bank column, and then a column for discounts, right? Because once you are into buying and selling or as a merchandising firm, sometimes you give discounts to your customers. So you need to account for those things as well. So this is a typical example of how a cash book will look like, right? So this is how a typical structure. So you have the dates, right? Then the particulars. Then what is the reference ID in the general ledger for that particular item you are recording? Was the item a cash item or it was a bank item? So you see where the thick line is, right? You see the thick line?
Yes, please.
Okay. Yes. So everything on your left is debit, is the debit side of the cash book. And everything on the right is the credit side of your cash book. Right. Okay. Okay, so that's it for the cash flow. If we look at the trial balance as well, we have just a few minutes to wrap up. If we look at the trial balance as well, you realize that at the end of the day, the account balances that you had, you need to close them off, right? So once you close them off, so we call something balancing off. So balancing off. So you close them off, and then whatever balance is left on the individual accounts, right, is what you use to prepare your trial balance. So basically, the trial balance will give you a list of all debits and credits balances that was extracted from each of the accounts throughout the ledger system. So the sales ledger, from all the ledgers. So you pick the list of all the debit and credit balances, and then you would use it to prepare your trial balance. What it really does, the trial balance, what it really does is that it helps you to reasonably check whether you've followed double entry, right? So whether you've followed the debit credit equality, that all the transactions and balances have also been recorded in the correct ledgers. So it basically just gives you arithmetical accuracy and whether you've followed double entry. But sometimes, even in this, you may still find errors. So it may not necessarily help you to see all the errors at a go, but at least they'll help you to check out some arithmetical accuracy. So once you have some additional information together with the trial balance you've prepared, then now you are set to prepare the financial statements, which are the income statements, right? The income statements, the statement of financial position or the balance sheet, the statement of cash flows, the statement of changes in equity, and then so forth. Okay. I think that looking at where we've gotten to, let me see. It's not too much, but looking at where we've gotten to, let me end here so that next week we'll start with this, and then we'll continue with this, and then continue with whatever else we are supposed to do. Okay, so the remaining 5 minutes, if you have any questions from today's class, can I please start them? Any questions that you want answered, at least from what we've done today? Basically, we've done accounting equation. We've looked at the effect of transactions on the accounting equation or the balance sheet. And then we've also tried to look at how, examples of these things. Then now we came to also look at the accounting cycle. We saw that once the business transaction takes place, we need to analyze it, and then now we move into processing it, where we record in the journals, then we post to the ledgers. Then after the ledgers, we prepare our trial balance. After the trial balance, now we would have what? We will have a financial statement, which at the end of the day would give to our decision makers for them to take the decision that they ought to take. Okay, Randy, your hand is up. Any questions for me? Any questions for me, Randy?
Sorry, it was an earlier submission, so sorry. Thank you.
Benson, any questions for me?
Madam, please pay the submissions when we are talking about the day books. We're talking about entries and balancing of the books. So I wanted to ask that in accounting, when making entries and when balancing an equation, which one should we place much emphasis on? Is it the entering or the balancing?
Oh, if you've understood what I've said well, right?
Okay.
All that I've said is that you record, it moves from a step-by-step process, right? The first place, anytime anything happens in the business, we record them in the journals. That's the first place we record. That's where the books of crime entry, that's the first place we record. But you realize that there's too much details, and you're also recording the things chronologically. And so when you post, now you will begin to post them into, okay, so everything relating to A, customer A, everything relating to customer B. So that at the end of the day, I ask you, oh, so how much does customer A owe you? You can tell me. But the way it is being recorded in the journal is recorded date by date. And so when I ask you, how much does customer A owe you? You are now going to be calculating on your own individually. But if you've posted to the ledger, what you will see is that, oh, right in the account of customer A, you can tell everything that relates to customer A. So that's what the ledgers will do. Then after the ledgers, now the balance is, oh, okay, so when I look at everything, customer A owes me 5,000. Customer B, the next thing I also see owes me that. In that sense, we'll sum up all the people who owe you, right? And that is what we record in the control account, which we find in the general ledger. So now when we see sales on your balance, on your income statement or on your financial statement, we know that, oh, okay, we know where the sales figure came from. It's an aggregation of customer A, customer B, customer C, customer D. But as you go into the journals and the ledgers, then now you find more details about the individual customers. So the details, more details are found in the journals. But as you are coming down to prepare the financial statement, now a lot of aggregations are happening. And so what you end up seeing on the financial statement would be a lot of what? Aggregations. If you want deeper and further and detailed particulars, you may need to be going back into the process to see what's happened when in the process. Benson, is it okay now?
Thank you, madam.
Okay, Solomon. Oh, sorry, Solomon, wait. Mohammed raised his hands before you. So let me. Mohammed.
Madam, thanks for your presentation. Please, you mentioned that the cash book has debit and credit columns.
Yes.
And also mentioned that it serves as a ledger and something. I didn't get the other one.
Oh, okay. So what I said is that it's a book of crime entry, and then it works as a ledger too. The reason why I said that is because what did we say the book of crime entry is? The first point of recording, right? But the cash book is also the first point of recording for cash and bank transactions as well. You get it? So for cash and bank transactions, once you record them in the cash book, there's no need for you to post it into any other ledger, because the cash book itself is also serving as a ledger. Because at the end of the day, you are able to tell from that same cash book what the cash and bank balances are.
Thank you.
Okay. Solomon, please, your hand is up.
Yes, please, madam. Very sorry. I didn't actually want to interrupt while the classes was going on. My problem is peculiar. Like, I am a visually impaired, and I was actually finding it difficult on how to view this live from yes.
Okay. I think then we'll have to talk with you.
Yes.
Please get in touch with Dr. Aboagye Otchere, okay? And then we will see how best we can help you, okay?
Very well, please. Okay. Thanks so much.
You're welcome. Priscilla, your hand is up.
Yes, please. I wanted to find out if it's possible for us to get the slides so that at least we can go over it.
So Dr. Aboagye Otchere will get in touch with you with respect to that. Has he given you the earlier slides? So whichever means he used to get it.
Today is actually my first time joining the class.
We've been given the other ones.
Okay, so just the same way he gave you the other ones, I know he would also send this to you, right?
Yes, please. Thank you.
Everybody is okay? We're good? Okay, so please, this is it. It's not, listen, it's not a lost cause. Technology has its own challenges. Assuming we probably met face to face, there were a lot of things I could have done on the board and all those things, but no problem. Please, at least we've tried our hands on some. Please go back to the slides, really look at it, and try and understand at least the few we did in class. Are you getting it? And then I know that with your tutorial sessions, you will do more questions. The truth with accounting is that you don't sleep on your bed and have the lecture slides up and you'll be reading, say, oh, accounting, you don't do. You pick a pen and a paper, you sit up and you work, you try your hand. And so if you think you are going to be reading it like a storybook, it may be difficult, but you need to sit up, pick a pen and a paper. The things you saw me show on the slide, try it yourself. You realize that immediately you pick pen and paper, the dynamics change. So sit down, the things we did, try it yourself and make sure that you've understood it. Once you do it in that manner, you realize that it becomes quite bearable. It's not difficult. Whether you've done accounting before or you've not done accounting before, the battle is won in the mind. You are capable of doing anything. The secret planning and preparing. So thank you very much for the class. Let me not take any more of your time.
Thank you.
Thank you very much.
At the end of the section, we are all going to be fine. Because I want to be fine in my family.
Hey, madam, I'm sure you want to
Talk, please.
Okay. Good. Okay, so good morning once again, and thank you for.
Good morning, Doc.
And
good morning.
I hope that we get to be again, but